some of you that are not familiar, we changed the name of this company from Brazil Resources to GoldMining about a year ago. So effective now, we are GoldMining Inc. Our ticker symbol is in Canada is Gold, G-O-L-D, and in the US, GLDLF. Because you're all fast readers, I believe you've read this, so I can move on. And basically, just in terms of what we have today, in terms of resources, we have about 19 million ounces of gold resources in all categories. We have 2 billion pounds of copper, so our gold equivalent number is roughly 23 million ounces of gold equivalent resources, 43,101. We actually have a uranium project, which is very interesting as well, because uranium, since November 8th of this year, just a couple of weeks ago, has been in a real uptrend. Uranium prices are up over 20% on the back of McArthur River's shutdown. That's the world's largest uranium mine. Gold mining, through an acquisition we made in 2013, we have a joint venture with the French nuclear company Areva, where we own 75% of the Rhea uranium project in Canada's Athabasca Basin, and Areva owns 25%. So if you wanted a bit of uranium flavor with your gold investment, I think we're just about the only company that provides that kind of leverage. Insiders, including myself, have been at the company since day one. We own about 25% of the company. This conference has been organized in collaboration with Marin Katusa. Marin's KCR fund, along with Doug Casey, own 17% of our company. I believe we're one of the largest gold investments that Marin has in the gold sector for gold leverage and optionality. And we have just under $16 million of cash and a very, very low burn rate, which means that the current cash on hand and the current burn rate were funded for at least 3 more years. And so you have a company that has got a strong treasury, roughly $6 million of cash with warrants that are in the money. That would be on top of the 16 million of cash that we have. And so a strong treasury, very large resources for strong leverage. And our most recent acquisition was in Peru, the Crucero project, which we're hoping to close very soon. We've made a number of bear market acquisitions. In fact, my goal is that maybe 10 or 15 years from now, when they teach in business school about buy low, sell high, we could be a true case study for that. Because when the bear market started in 2012 for precious metals, and by the way, I had someone recently point out that this has been one of the most brutal bear markets we've had in precious metals in decades. And I'm one of these guys who really hates regrets. I don't want to look back and say, geez, I wish we had done this or that. I don't think I'm ever going to look back and say, during that bear market between 2012 and 2016, we should have bought more gold projects. We have been busy. We have been busy since 2012. You can see, how do you turn the lighter or the pointer on this, you know? Anyways, we'll come back to it. But basically, you can see during this bear market, we've made acquisitions that gets us to the total that we are. The circle that you see there is meant to represent the size of the total resources that we have. So you can see as the bear market got deeper, we made more acquisitions. And this is a slide that just shows the context of what we've been buying in terms of the market caps of the last 5 acquisitions. We made for $62 million. We've acquired $808 million of former market cap. Thank you, Ron. Not sure what's wrong with the projector here, but basically, here we go. All right, here we go. So $62 million, and the same companies that we acquired had over $800 million of combined market cap. So these are the opportunities that we see, and we believe it drives share price performance. Our share price since our IPO in summer of 2011 are up 138%. During the exact same time frame, the GDXJ and the TSX Venture are down 60 and 70% respectively. We have 130 million shares out. So after 7 years, many deals, financings, and to get to the position we are, I think we have a good capital structure. On a fully diluted basis, we have 150 million shares out, but 30 million of additional cash comes into the treasury. 3 analysts cover us at Roth Capital, Rodman, Renshaw, and Cantor Fitzgerald. As I mentioned, insiders own 25%. Katusa and Casey with their KCR fund own 17%. Sprott and other institutional investors are big shareholders. We have coverage by not only the three analysts mentioned here, but Frank Curzio of Curzio Research has been covering the company for a number of years now. He does great work covering the stock with his podcast and the various letters that he writes. You should take a look at that as well at curzioresearch.com. And I mentioned we have no debt and a market cap that when you divide our market cap by the total ounces of 20 million ounces, you get a net result of $7 an ounce in the ground. That's pretty attractive. I like $7 an ounce in the ground. Our technical team is made up of individuals who've run exploration for the likes of Kinross, BHP Billiton. Paul Zhang, who joined our team after our acquisition of Belhaven, ran exploration for Belhaven for BHP in South America. Dr. Ross Sherlock, who did the same for Kinross. Enzio Guripi, who ran exploration for Kinross in Brazil. So the technical nucleus is of individuals who are active in the countries that we've been doing business in. And our strategic partner in South America, Brazil Invest, has been a partner since day one. This is quite amazing. These guys have invested $15 billion in Colombia and Brazil. The only gold company that they've invested in is our company. They own 10%. And Mario Garnero, the founder and chairman of the bank, sits on our board of directors, has been a founder and a director of the company since the beginning. We like what's going on in Brazil. The Brazilian real is quite weak today to the US dollar, so you have a currency advantage. Brazil is a big gold mining country. The largest gold mine in South America, Paracatu, operated by Kinross, is in Brazil. And what we have is our San Jorge project, is our flagship project right next to the highway in Pará State. The other company developing a project here is El Dorado with their Tocantinzinho project. We continue to have this technical difficulty, so hopefully you can bear with me here. But with the San Jorge project has a grade of about 1.54 gram per ton. For an open pit resource, this is a very doable and workable grade. The project has only been explored to the tune of about 20% of a 50,000 acre project. Metallurgical work done shows 93% recovery. We're talking about 145 diamond drill holes, drilled down to a depth of about 300 meters. Now, before I switch gears and go to Colombia, what we've done at the San Jorge project is in 2013, there was a preliminary economic assessment done on the project. That study shows that the project is economic at $1,200 gold, $1,300 gold. So the thing you have to appreciate about our strategy is that when the market is down, we think much like the way Vikings would think when they're out there looking to conquer and make acquisitions. Right now, with the gold price below $1,300, I've got my Viking cap on, and we're looking for more acquisitions. When the gold price goes over $1,300, we become farmers, and we've got a really exciting pipeline of assets that we can cultivate. In my mind, San Jorge is a project that really fits that bill. The 2013 PEA showed that at $1,300 gold, you have 36% internal rate of return based on a mine life of 10 years and 100,000 ounces of gold production. A fairly reasonable capex of $100 million. This is a very doable project, and we're only looking at the indicated resources of the property. So a large inferred category with further exploration upside is still part of the work that we're going to plan to drill and grow and have an updated PEA that we will look to develop. The other area where we've done work is Colombia. We've made 2 acquisitions in Colombia over the last year. We've consolidated a project that previously was 2 separate public companies. Titiribi was Sunward Resources and Lamina was Belhaven. Separately, these 2 companies had a combined market cap of $450 million. We bought both of them for less than $30 million in stock, have now consolidated a very large area that covers 11 million ounces of gold equivalent resources, large gold copper porphyry with 20 follow-up drill targets in a region that Newmont is now invested in, AngloGold Ashanti is developing. Robert Friedland has made a move here with Cordoba Minerals. The Mid-Coco Belt in Colombia is a very exciting exploration region. And when you look at the drills that came out of the last 6 areas that were drilled on our La Gurucha zone, you see 7 intercepts with intervals from 50 to 300 meters, ranging from 0.7 to 1.7 gram per ton gold. This is on a property that's not even included in our 43-101 resource. So when I look at sort of what we can do when it's time to develop the portfolio, we've got exciting near-term production with projects like San Jorge. We have great drill-ready projects like La Mina with the Belhaven project. We have the infrastructure. We have equipment, we have the building, we have the area where a lot of the core was stored. And we're not even done with our acquisitions. Our 19 million ounces of gold resources don't include the latest acquisition announced that hasn't closed yet of the Crucero project. This project I'm hoping will be announced in the next week as our latest acquisition, gives us great news flow in the near term. And just trying to get to the next slide. And in terms of sort of next steps, we want to continue to make acquisitions. We want to release 43-101 reports on Crucero and the Yellowknife Gold Project. These are the last 2 acquisitions. I expect to see our total gold resources try to approach 23 to 24 million ounces of gold. And you've got the 3 analysts that cover the company. Come and talk to us at the booth about the latest research reports. We're happy to share this with you. We're happy to also give more details on some of the developments that honestly is too much to cover in 10 minutes. I'd like to just touch on this because to me, it's all about the trend with gold exploration. The majors are spending more money looking for gold and finding less. The latest studies show that it's costing the gold sector $45 per ounce to find a new gold resource in the ground. So when you look at our company sitting on 20 million ounces of gold trading at $7 an ounce in the ground, you can appreciate the kind of position we have in a better gold sector or trend when it comes to M&A. And I think this company is totally in the driver's seat to be able to drill projects, develop projects for production, or to be caught up in M&A activity at a higher gold price. This is a chart of every company that's at a resource stage in the Americas pre-production. The only other companies that have a larger gold resource than we do today are Northern Dynasty's Pebble project and NovaGold's Donlin project. At 20 million ounces, we're truly in the 1% club, which is basically the 1% of companies that have over 5 million ounces of gold. And of course, we have way more than that. We have 20 million ounces. All of these are disclaimers. We had a bit of technical issues, so if you missed anything, please come to the booth, and happy to give you our presentations there. And I think we're out of time. Thank you very much.